Hello, and welcome to episode 443 of the Money to the Masses podcast with your resident expert, as always, Damien Fay, and me, Andy Leeks. Damien, we're back. It's New Year. Well, it's almost New Year.
It's almost New Year because, just to let you behind the curtain, we are a bit like Michael Bublé and Jules Holland, who produced these things around Christmas, actually pre-record the show. So we recorded this show just before Christmas and the days before. I don't think anybody expected Andy and I to meet up between Christmas and New Year to record the show. So if at any point during today I say this year, then I'm referring to 2023. If I say next year, I'm referring to 2024. So we are almost in the new year, and that is going to be the theme of this show. So how you're going to get the most out of Money to the Masses going forward, but more importantly, I'm doing a whole investment piece looking at 2023, what happened, moving into 2024, what to expect, and some of the investment themes. But before we do that, Andy, you're going to read out a podcast review.
Yeah, and so we received a fantastic review from Sharm with the title of The Best Money Podcast. And Sharm goes on to say, this is the first ever time I've written a review for a podcast, but I had to do it as this is the best ever money finance podcast. It's just filled with useful information, usable advice and insights to make life more informed about finance and money matters, at the same time entertaining to listen to. I particularly enjoy the investment pieces, which are educational, and I'm addicted to listening to them while going to sleep. Not sure what that says about you, Damien, but it's somehow relaxing and informative at the same time. Keep it going, team. All the best.
That's brilliant. So Sharm will be pleased because there's going to be an investment piece on today's show, but also good night, Sharm, and
do sleep well.
Do sleep well. So moving on with this show, I'm going to start off with the investment piece before we move on to the things that you should be looking at regarding Money to the Masses to make the most of your finances and actually help support the show throughout 2024. So this time every year I do a piece for 80/20 investor members where I look at what's happened in the previous 12 months and then look at what the main themes could be going into the next year. So I'm going to do the same again this year. And actually 2023 was a very good year for investors. If you recall, 2022 was one of the worst years on record for an investor. So the range of equity returns were basically all negative no matter where you invested. If you're in the FTSE 100, you're only marginally down. But then if you were investing in the tech-heavy NASDAQ 100, you were down as much as 32%. And then if you looked at bond markets, well, you were down anywhere between 8 to 30%, depending on where you invested, and the worst performer were index-linked gilt. So 2022 was a disaster, and moving into 2023, investors were obviously slightly apprehensive about what would happen. I do quite like to look at what investment banks predict. So every year, investment banks do kind of nail their colours to the mast and say where they think the S&P 500, which is obviously the US stock market, will be at the end of the following year. And so I pull those together and just put them out there because obviously these people make a living out of investing and have to make these predictions, even though trying to predict something 12 months from now is pretty foolhardy. But last year, the average prediction for where the S&P 500 would be was about 4,050. So at the time, that was pretty much the same level as it was at the end of 2022. Well, as I make this show just before Christmas, we are sitting at around about 4,750 on the S&P 500. So you can see that's a massive difference. We're almost at one point heading towards nearly 18% higher than they predicted. So overall, investment banks were very pessimistic coming into 2023. And what that really shows you is a reflection of the fact that as humans, even professional investors tend to make predictions based upon what was happening just before they made those predictions, so that the world would carry on as it is at the time of the predictions being made. So pessimistically, they thought, well, we're going to have a difficult year in 2023. Now, I'm going to give you a broad overview of where we are coming into the end of 2023. I know it doesn't include the few trading days between Christmas and New Year, but it gives you a feel. Now, the performance tables are almost the reverse of what we got in 2022. So far in 2023, the NASDAQ 100 is up 51%. Now, that's quite incredible. Don't forget that is partly a result of the AI theme, so artificial intelligence, lots of enthusiasm for that theme. We then had the Japanese stock market was up second, that was up 28%. And if you go towards the bottom there, FTSE 100 was up 3.54%, and then the MSCI Asian ex-Japan index was up around about 1.7%. Now that is in local currency terms. If you factor in the movements of the pound, the numbers are lower, but still the Nasdaq 100 would have been up 45% nearly, even if you did convert the gains that you made back into sterling terms. But what about bond markets? Well, bond markets had a disastrous 2022, and 2023 wasn't much better. They pretty much traded sideways into the summer, and there was a bit of a dip, particularly in regards to bonds with longer duration as interest rates picked up, and there was fear that inflation would stay higher for longer than previously anticipated, along with interest rates as a result. But at the back end of the year, so from just before the beginning of November, we've seen a big change in investment markets and in particular bond markets. So where we are now is we've had bond markets in positive territory. Now, depending on what type of bonds you hold, high yield bonds are up about 10%. That's partly because high yield bonds do have quite a high correlation to equity markets. So when equity markets tend to do well, high yield bonds tend to benefit. But down the other end, index-linked gilts, which have very long duration, so they're very sensitive to interest rate movements, they were the laggards. In fact, if you went back to October this year, so only 2 months ago, they were down 10%, more than that, almost 12% year to date. Now they're back in positive territory, so it shows you the rally that we've had into the year end. Now that is one of the big themes that comes out as we go into 2024. Bonds have been a bit of a disaster zone for almost 2 years, certainly for the 18 months into the summer of this year before we had to turn around at the end of 2023. Now, what caused that turnaround? Well, it's the idea that the interest rates at the Bank of England, US Federal Reserve, the European Central Bank, they won't be high for longer as people expected. They actually now, the market started pricing in a number of rate cuts in the US, in the European Union, but also in the UK. Now, just going back over the last week, the changes in the predictions of where the base rate in the UK will be have shifted significantly. So we were at a stage where the market was only just thinking we might have a rate cut in 2024. We're now at the stage where they think there could be as many as 5, and that by the end of 2024, we might see the base rate be back below 4%, which is significant. And that has happened in a very short space of time. And it's because inflation has fallen more quickly than analysts had expected. So there has been a sizable shift in the outlook for not only inflation, but therefore interest rates, not only in the UK, but in the US and in the European Union. So the big theme, I think, for next year is that bonds are back. If you look at anything that you read in terms of investment bank outlooks, where they think the value opportunities lie, bonds is where most of them are focusing. And in fact, they're moving towards longer duration bonds, because as rates come down, then that longer duration, it amplifies the upside for those types of bonds. So where people have been holding shorter duration bonds not to be hurt as much by rate hikes over the last 2 years, the opposite is likely to happen. So longer duration assets will be in favour. And that's a massive shift. So even I have bought more bonds in my own 50k portfolio that I run on 80/20 Investor in recent weeks. So with the outlook shifting, I mean, we don't know that interest rates won't go back up again. We don't know inflation won't suddenly rocket. That is one of the themes, what's going to happen to inflation in the coming months. But the market is now strongly betting that inflation peak was at the end of 2022, and we are now heading back towards the central bank targets. But then the next theme that I want to mention leads on from that quite nicely. So it's about the 60-40 portfolio. So 60% equity, 40% bonds. Now, in recent years, so the last 2 years, that portfolio has struggled somewhat. So if we go back and look at what happened in 2022, that portfolio would have been down around about 11 to 12%, which was one of the worst years on record for a 60-40 split. If you jump forward to 2023, now a 60-40 portfolio could be up as much as 9%. So a significant turnaround. But what actually happened, if you go back again to just before the start of November, year to date in 2023, a 60-40 60-40 portfolio was barely up. It was probably up about 1%. Nearly all of that return, so about 8% return, has happened in the last 2 months. That shows you the seismic shift. And the theme now going into 2024 is that bonds are back and that bonds are working as a diversifier, or could work as a diversifier once again. So that means that the 60-40 portfolio is benefiting from its bond exposure. From the beginning of 2022 to really the back end of 2023, bond exposure was a bit of a drag on any portfolio. So that's a massive change. The other thing is we are now looking at the idea that we're shifting where we are in the interest rate cycle. So we've gone from great rate hikes, so very fast extreme rate hikes. We've now gone into a period of pausing. Now the market is pricing that we're going to go into a period of rate cuts. Now we don't know that's going to happen, but if we do, then there was a piece that I think appeared on last week's show where we picked our highlights of the best bits of 2023 when I talked about the interest rate cycle and investing throughout it. So as we move through 2024, it could mean that we move into an era of interest rate cuts, which therefore will mean that different types of assets start to perform well. And so that could be things like property. So we might start seeing property improve because don't forget, real estate can benefit from lower costs of borrowing, but also there is an attraction of yield there that people will start to go after. And also we might see people looking more at yield when they're investing as well. So we'll start seeing some of the equity income funds perhaps attracting money. But the big winners, again, if we do go into that regime, will be bonds, and it will be things like gilts, as I've mentioned, because of their longer duration. Interestingly, we could also see emerging market bonds be something that will be interesting, particularly in local currency terms. That's something that you probably haven't heard people talk about for a long period of time. But if we start seeing rate cuts, I think we could be then talking about the US dollar a lot more. And obviously as yields come down as well, they've both had big impacts on markets throughout 2022 and 2023. A strong dollar has proved a headwind for equity markets in the US and then by osmosis globally. But also we had higher bond yields with people being afraid of what was going to happen with inflation. So there was a dynamic that was happening that when those came down, they were always potentially going to provide a good tailwind for equity markets in the US in particular. And so a weaker dollar, which will weaken if we do get rate cuts, because as you get rate cuts with any currency from a central bank, then that currency will tend to weaken. And if you get a weaker dollar, that also tends to be positive for things like emerging market assets. So local currency emerging market bonds could be something that could be quite interesting. Now, I touched upon something there about falling yields on bonds. That can also be an indication, not just about the inflation story, but that the market's starting to predict a recession. So I think recession is going to be a big story going into 2024. If you go back to the beginning of 2023, you'll probably think, yeah, I seem to recall we were talking about recessions back then. And you'd be right, because at the end of 2022, the Bank of England predicted that we were going to be in a recession in the UK for 2 years. Well, that never materialised. And we haven't seen a recession, for example, in the US. And so the story of a soft landing where central banks managed to utilise their policy, so rate changes, and to stop the economy overheating while keeping the lid on inflation, bringing that back under control, that they may be able to pull off that magic trick and produce a soft landing. That is the belief now of the wider market going into 2024. For a lot of 2023, we were flip-flopping between, yes, there would be a soft landing. Oh my goodness, we're going to get inflation going through the roof. Rates are going to keep going up. And so there was always this change, a lot of volatility. If you look at a chart of 2023, you'll see there's some big swings up and down. But ultimately, for some markets, they were just going sideways. So your portfolio, if it was mixed between bonds and equities, you'll notice it probably went sideways for most of the year with swings up and down. And that was because the market didn't know whether it's coming or going. As we go into 2024, it seems to be the biggest bet is that we are going to move into a world of rate cuts, potentially a recession. So that could have an impact on equity valuation. So obviously, certain areas of the market having a recession is not necessarily a good thing, obviously, for company profits. And so it could mean that we could have some muted upside for certain parts of the stock market and the wider indices as well. Now, at the end of this piece, I will talk about the predictions from the various investment banks, just so you can get an idea of where they think we might end up. But the other thing I want to talk about, another theme, is divergence. So you will notice if you've looked at your portfolio, particularly in recent weeks, where your overseas assets haven't rallied as hard as you might have seen the stock market go up in the US, for example. So you might have had funds invested in maybe US tech companies, but the returns you've got are nothing like what you're seeing on the actual stock market itself. And that's because your returns have been converted back into pounds, so you've got that currency movement. Because when one central bank is looking or predicted to cut rates and another isn't, which is what we've had in recent weeks, where the Bank of England was very hawkish, so it was talking up the idea that rates would stay higher for longer, but the US Federal Reserve basically admitted that it would end up cutting rates in 2024, then the bets in the market were reflected in the currency market. So the dollar weakened and the pound strengthened. And so therefore the pound has risen quite significantly recently. So that divergence in policies, so you might have a more dovish Fed, so they're going to cut more quickly than maybe say the central bank in the UK, then that will have an impact on their stock markets, but also currency markets, which will therefore be something that will be difficult to navigate going into 2024. So that is something to bear in mind. So if you think back to this rate hiking cycle, the central banks started hiking at different times and ultimately finished slightly different times. It will be the same on the way down, and that will have an impact on markets. So you'll start to see probably certain equity markets outperform others. Now, the other thing I want to throw in there is that next year you're going to have not just geopolitics again, because we've had obviously the Ukraine war, we've had the fighting in the Middle East as well. So those have all caused problems, and of course they could escalate, which could in turn cause inflationary pressures that we've seen in the past as a result, particularly in relation to energy, and that could cause a second wave of inflation potentially, which would undermine all of the ideas that I'm explaining that the market is banking on, so lower inflation, lower rates. If that were to come to fruition, then that would cause a real upset, a shock in bond and equity markets. And so you can never predict with geopolitics what might happen. Of course, you've got issues potentially in China with Taiwan as well, if something escalates there. And we've also got the tensions between China and the US themselves, so almost trade war style headlines that we could see. But the other big story that will happen towards the end of next year is the US election. So we will have a US election, and that does tend to have a big impact on markets. Now, if you go back to 1928 and look at election years, then election years, the S&P 500 tends to rally just over 11%. That takes into account up to the 2016 election. Those numbers, that average, doesn't take into account what happened in 2020. But even though we had the pandemic and the market crashing, during that year, the S&P 500 still finished up over 16%. And that was because we had the election at the end of the year in November. But also we did have the discovery of the COVID vaccine. But it just goes to show the euphoria that you can get. You get volatility, but you tend to get a positive year in markets with the US election. So I'm not predicting you will do, but just bear in mind that is going to start to have a bigger and bigger impact as we move into the second half of next year. So I've given you a high-level summary of investment themes going into 2024, and the hope is that the market in 2024 will be very different to the one in 2022, but also 2023. So the uptick we've seen at the back end, the market is really predicting that will continue to 2024. Now, I'm not going to go through all of the different predictions of where the S&P 500 will be at the end of 2024 from the various investment banks, but I will give you the average, just because I know that if you've heard the piece at the beginning of the show where I gave you the average of where the predictions were for 2023 and how, well, unsuccessful they ended up being, where do the investment banks think the S&P 500 will be at the end of 2024, just as a finger in the air, then on average they think it will be up about 2.5%. So we're not seeing a lot of upside. What is different though is that the range of predictions are quite wide, from the highest saying we're going to get another 8% from where we are now to minus 10%. So there is a wide range of predictions, which perhaps shows that we are at a turning point in markets, that some people don't believe we've got a lot of upside, where others think we have now just hit liftoff. And the final thing I just have to throw out there, just because I almost forgot it, is AI. So AI is going to probably still be the biggest story in 2024, because 2023 was just the beginnings of artificial intelligence coming into play. We are now at the stage where it's going to start disrupting markets and disrupting particular industries, and there's going to be innovations that people will probably want to jump on the back of. And it does mean that we probably are seeing some lofty valuations in the tech space. There have been parallels drawn back to the dot-com bubble. So while I hope it's not going to be that, but it's sensible for me to at least draw those comparisons, because if you've got a technology that's like a new revolution, like the internet was when we had the dot-com bubble, there is going to be some investor enthusiasm about the prospects for companies using artificial intelligence and what this new technology can really do. And that also carries risks as well as some upside.
Okay, so let's move on to the next piece of the podcast then. And we're just going to quickly cover off the things that you can do as listeners to get the most out of us at Money to the Masses, because of course you listen to the podcast, which is great. And we do have quite a heavy skew to investing because that's Damien's expertise. But there's a wider editorial team here at Money to the Masses who are busy every day updating the website, which is at the core of what we do.
So I would say, as a finger in the air, that probably investing as a theme or topic is probably only about a quarter of what Money to Masses does in terms of new content we write and produce on the website. The rest of it covers all areas of personal finance, from budgeting to deals in terms of money saving, but also mortgages and all types of insurances, whether it's home insurance, car insurance, travel insurance, pet insurance, personal insurance like life insurance, for example, or pensions as well. So we're going to run through some things that you may not be aware of that we do, and for you to go and look at them and bookmark them. Now, one thing that I will say, going into 2024, we will build a page dedicated to podcast listeners on the Money to the Masses website, because there are lots and lots of deals that we negotiate with companies who make products that you will use that we just don't shout about. And if you go on the website, you will find them, whether they're investing products, and these can be exclusive deals to us, or it could be insurance products, for example. So we want to be able to give you those. So whenever you think about doing anything with your money, you should think about us first and go and look at the resources that we provide and the deals that could be there. And also, you can therefore help support the show. I know a lot of people wonder how you can do it. We produce the show for free, but that's how you can help support the show. One thing I'm going to mention, first of all, I talked about interest rate predictions in that last piece of the podcast. So where's the base rate going to be, which that therefore impacts where mortgage rates are likely to be. Well, every month I update the latest predictions of where the market thinks where the base rate's going to be in the next 5 years. And that's based off of swap rates. So I draw charts and put it on the Money to the Masses website. But also I produce videos on YouTube that talk about this sort of stuff and give you a very short but punchy summary and insight into what's happening with mortgage rates and the base rate at the Bank of England. So make sure you do subscribe to our YouTube channel, because there's lots of contemporary content that isn't going to make it onto the show that you'll want to know. For example, the best savings rates, the best credit cards. I do the market update show that provides insights into what's going on in investment markets in more detail than I talk about on this particular show.
And so obviously this podcast is going out right at the start of the new year. There's going to be that new year, new me theme with a lot of people who have been putting off those jobs. And one of the first things that I would suggest you do when you go to the Money to the Masses website is check out Damien's Money MOT, which is essentially a financial health check where in just 2 minutes you answer a few questions and you'll get a free MOT result that will tell you how fit your finances are. And also, if you want it, it will give you a money plan and the steps that you need to take in order to fix your finances and improve your score.
So you do get a score, as Andy suggests there. You'll get a grade that tells you where you stack up in relation to people in your position. So it is anonymous, so you don't have to give personal details. But if you want the money plan, you can sign up and get an email sent to you daily or weekly that tells you how to improve your finances. And it covers everything from investing, pensions, savings, credit, debt, you name it, it covers it. So I suggest everybody does that. We'll put a link in the show notes, but there is a big button on the homepage of the Money to the Masses website, moneytothemasses.com, which you can click on and go through and start to use the MOT tool.
And so while we're talking about improving and fixing your finances, one article which I'd like to bring attention to is our cost of living guide. We built that throughout the course of the latter part of 2022, right through 2023. And we've built a whole list of resources, all the things that you would need access to if you're struggling with your finances. And that's things like the benefits that you're entitled to, how to save money on subscriptions, how to budget more effectively. We regularly update that article and we'll put a link to our cost of living guide in the show notes. We also put a lot of effort and time into updating all of our savings and mortgage rate tables. Now, every week, as you know, there are new savings rates coming out on various different accounts, and there's hundreds out there and it's difficult to keep track. Well, we do that for you, and we put it into one single, easy to navigate, easy to understand web page.
So as Andy said, those tables are updated regularly. We look at the market, we update them twice a week, and that goes for both the savings tables we have and the mortgage rates table that we have. So we look at all the different types, whether you're a first-time buyer, a buy-to-let landlord, or somebody who's looking to remortgage, or if you're moving house, we look at all the best rates that are out there. And even if you're not looking for a mortgage at the moment, it is useful to bookmark those pages. Then you can see what's happening to rates. And at the moment, as we make this podcast, mortgage rates are coming down.
If 2024 is a year where you want to start getting into investing, then the Money to the Masses website has a host of resources. Simply go to moneytothemasses.com and then click on the investing category, and you'll be able to see the list of updated articles on there. And we feature all of our most popular articles on that page. We'll put a link to that section of the website in the podcast show notes.
And just to give you a flavour of what's in there, that's going to be articles about how to invest, financial planning. They're going to be product review. So any investment platform or product that you see out there, we will have reviewed it. So you can see our independent review of it. You will also find comparison pages which look at a product, let's say a lifetime ISA, for example, and we look at all the different types out there and compare them, so you'll be able to make an informed decision about which one that you want to take out. And while on the topic of comparison, there is a Best Buy tab, and we have just introduced this on Money to the Masses. If you click on the Best Buy tab at the top of the website, it will list the best buys for all sorts of products. And so they're mortgage products. They can be things to do with energy bills, like fixed rate energy tariffs. It can be investing, from junior ISAs to stocks and shares ISAs to trading apps. In the savings space, it's all the different types of savings accounts, including fixed rate accounts and also children's savings accounts. Credit cards and loans, we actually do stuff on all of those areas. Maybe you're looking for the best 0% balance transfer credit card. There are articles and tables that show you what they are, what our view is. It could be looking at different things like car, home, travel, pet, life insurance, or over 50s life insurance. I'm listening to things here. Health insurance is another one that people don't even realise that we cover. So if you've got any product out there, don't go to Money Saving Expert like you would normally do. Come to Money to the Masses, because we have all of the content on our website and we can give you an honest review, an opinion on the various products, but also point you in the direction of services and people and experts to talk to if you want to take things further.
Yeah, and on many of those articles in insurance, life insurance particularly, there are deals available where you can get up to £100 cashback, for example.
One other thing I've obviously got to mention, 80/20 Investor. If you're interested in running your own money, picking funds, for example, whether that's investment trusts, ETFs, unit trusts, then do have a look at that, because it's something that I run my own 50k portfolio. But of course, we do review all of the managed services out there, so the robo-advisors that we've talked about in the past. If you're more interested in getting someone else to run your money, then we obviously do cover those as well.
Something you could all do for us right now, you could pause the podcast and do it, and it would really help us out, is head over to YouTube, find the Money to the Masses channel and subscribe to our channel. It only takes a few seconds, but we're looking to really grow that this year. Damien works really hard to produce regular updated content on there, a couple of videos a week. We are also going to be featuring videos from the podcast into 2024 as well, so you can see us as we produce this podcast.
Yeah, and just to point out, I don't know if people realise, but podcasts now appear on YouTube, and our podcast does appear on YouTube. So YouTube now has a podcast playlist option. Put it this way, if you look for Money to the Masses podcast and put the word YouTube into your search, then you will end up on the page on the YouTube website, which is effectively, it looks very much like if you looked at our podcast in one of the podcast apps. And the difference is you can obviously write comments and stuff below them. So it would be a great space for people to leave comments, say hi, whatever they want to do after shows, ask questions if they wanted to, which leads me nicely quickly onto the idea about our social channels. Instagram, obviously, I'm very keen on. We put a lot of content on Instagram, but our Facebook community, facebook.com/groups/money to the masses, which is nearly 6,000 people strong. Lots of good questions and helpful people in that community. So do make sure you join that as well. You can find us, of course, on all the other platforms as well. Twitter, I'm less on that these days, I'll be quite honest with you, for various reasons. I do prefer the other mediums out there, but you can find us and we do push content out onto all of them.
And finally, make sure that you subscribe to the Money to the Masses weekly newsletter.
Yeah, that's right. It comes out every Sunday at 10 a.m. There is a intro from me where I highlight something specific for that week, but then it also has the best of our content, but not just ours, the best of the content around the internet, particularly from major publications, so newspapers looking at their best money content and property content. And we also provide a summary in there with links to the podcast, for example, but also some of the content we push out on YouTube. So it's a great way for getting a roundup of what's going on in the money world. So make sure you don't miss out on anything in particular.
And so we'll put a link to that in the show notes, but it is moneytothemasses.com/weekly- or dash newsletter. That's moneytothemasses.com/weekly-newsletter.
So I think that's it. I mean, there's a whole host of things. I know when we finish this podcast, Andy, we're going to say, I wish we'd said that and we forgot about it. But we are going to be talking more about the things that we do and the things you can access via us that isn't just the podcast throughout 2024. We've been very poor. We've been doing this podcast for a decade.
Yep.
And we don't promote the other things that we do to help you. But also we don't tell you how you can help support the podcast. So we are going to get better at that. Obviously, do leave a review. A 5-star glowing review is the kind that I like. And if you get it read out, then you could get a Money to the Masses mug. And Sham, if you're still listening to the podcast, you're still awake, then do email me, damien@moneytothemasses.com, to claim your free mug. Because obviously, if I don't get an email, I know you dozed off about 20 minutes ago.
Okay, so that is it. We are done for this week and for this year. So thanks ever so much for your support. We hope you've had a fantastic festive period and into the new year. And we can't wait to bring you some more fabulous Money to the Masses content in 2024.
Yeah, so until next time.
Until next time.